In this video, I will be covering journal entries. This is part 1. There will be more examples in journal entries part 2. There's also worksheets that you could download to go along with the video, and they're found on helpmelearnthis.com. There's more information about that under the description on YouTube. So what are journal entries? Journal entries are used to record transactions to a journal, such as the general journal or specialized journal. Transactions can be external transactions or internal transactions. External transactions are exchanges between the company and another entity, such as sales to customers or purchases of supplies from a vendor. Internal transactions are exchanges within the company, such as transfers between departments or wages paid to employees. When recording journal entries, you need to know the normal balance of the accounts. Every account will have a normal balance, and it is the side the account increases on. To help remember the normal balance for each account, I think of debt incurrals. Debt accounts have a normal balance of a debit, so they increase on the debit side, and they're your expenses, assets, and dividends. So these accounts have a normal balance of a debit. Your curls increase on the credit side, so they have a normal balance of a credit. It would include your unearned revenue, revenues, liabilities, and shareholders' equity. So these accounts have a normal balance of a credit. We're going to journalize the following transactions for Angie's Kids. For every journal entry, there's 3 things to keep in mind. There will be at least 2 accounts involved. 2, there's at least 1 debit and 1 credit. And 3, the total debits must equal the total credits. So the first problem says, on January 1st, 2016, Angela Smith opens a daycare called Angie's Kids and sets it up as a corporation. She invests $5,000 of her own money into Angie's Kids. So $5,000 is being invested into the company by Angie or Angela. So the company's receiving $5,000. So they're receiving cash. Cash is an asset, so assets increase on the debit side. So on January 1st, the company would debit cash for $5,000. And then in exchange for the cash, the investor is going to receive equity or shares of stock in the company. And stock is an equity account, and that's what the S stands for. S stands for shareholders' equity, and has a normal balance of a credit, so it increases on the credit side. So the credit would be to common stock for $5,000. Notice that when journalizing this transaction, I listed the debits first, and then below the debit, I listed the credit, and the credit is indented. Also notice that there's at least 1 debit and 1 credit, and that the debit and the credit balance. So problem 2 says, on January 2nd, the company paid $500 for 1 month of rent. So they're paying for 1 month of rent. That would be an expense. Expenses have a normal balance of a debit. They increase on the debit side. So on January 2nd, the company would debit rent expense for $500. The problem also says the company paid $500. When you pay something, you're using cash. It would cause the cash account to decrease. So cash is an asset. It has a normal balance of a debit, so it increases on the debit side. So when the cash account decreases, you would credit the account. So cash is credited for $500. And then problem 3. On January 4th, the company purchased a laptop and printer for $1,500 for the business on credit using notes payable. So the company purchased a laptop and printer. It would be equipment. The account might be office equipment. This is an asset, so it has a normal balance of a debit. It would increase on the debit side. So on January 4th, the company would debit office equipment for $1,500. And then at the time of the purchase, The equipment was purchased on credit using notes payable. So the company is not using cash, is not actually paying for the equipment at the time of the purchase. They're incurring a liability. And the type of liability is they're using a note. Liabilities have a normal balance of a credit, so they increase on the credit side. So the company would credit notes payable for $1,500. Again, notice for each journal entry, the debit is listed first. Below the debit, you have the credit. The credit is indented. There's at least one debit and one credit, and the debits and credits equal. They're in balance. Thank you for watching our video. I hope you found it helpful, and there will be more videos, worksheets, and study guides at helpmelearnthis.com.